Well, welcome everybody to episode number 5 of Taking Stock. This is a hobby content collaboration between the Sports Cards Live YouTube channel and the Sports Card Dad YouTube network. It is Tuesday night, June the 20th, 2023. That handsome fella right there is Dennis Zender. My name is Jeremy Lee. Welcome everybody to the show. I'd like to thank everybody for all of your engagement, interaction in the chat last week when we talked about shill bidding here on Taking Stock. That was episode number 4. You can see that on the YouTube channel. Sports Cards Live, Sports Card Dad. It is residing on both of them. If you're not yet subscribed to either channel, please take a moment and do so. Also, we would like to announce that Taking Stock is going to be a bi-weekly show every second Tuesday. Starting today, it'll be every second Tuesday from here. So keep that in mind. Won't be every single Tuesday, every second Tuesday. As always, everybody, as always, your comments, your questions are in play. We are here tonight talking about leveraging sports cards. It's been a hot topic lately. Dennis covered it on an episode he did recently. We'll get into that a little bit later. But Dennis, I'm going to start off by asking you and asking the chat as well. Dennis, have you ever borrowed money against a card? Have you ever lent money against a card? And have you ever considered doing either?
No. I've never done that, Jeremy. I've definitely borrowed against a credit card to purchase a card, and then paid down that card or paid off that card, or contributed to that card with a sale of one of my cards. But I've never actually leveraged my card as collateral. I've never had any card in a vault. I like having my cards in my hands. It feels very out of place for me. And as a lender, as a banker, someone who evaluates credit risk for a living, or oversees that, manages that, it just goes against every fiber of my being to collateralize a card to buy another card.
Yeah, fair enough. Myself, Dennis, and chat, I've never borrowed money against a card. I've never thought about it, actually. And I've heard some cases for it recently that seem to make more sense than I've ever thought. And it's not something that I'm going to do, but I don't think I'm going to do it. But I can see why some people do. And I think it just depends on your overall financial situation, your risk tolerance, your horizon. There's all sorts of reasons why somebody might borrow money against a sports card. For example, Dennis, what if you have nothing else? What if you have a poor credit rating? What if you're card rich but cash poor, and the only way that you can access some liquid cash is to collateralize a sports card? Is that in your mind? And I want to really tap into your banker mentality here, because you're analyzing credit risk for clients on a regular basis. And if you can't advance them credit and they need it for something, whether it's to buy other cards or to pay rent, would you think that for somebody like that to collateralize a sports card, that it might make sense?
Well, I think when you look at, so let me specify. I'm not in credit. I'm not an underwriter or any. I'm not in the credit field. Actually, I'm in sales. So I oversee sales folks in sales, and bankers and managers and producers and commercial bankers. But that we have to have a relationship with credit, and I have to sign off on stuff, and I have a pen limit that goes up to a certain amount on loans. And so when I look at those types of situations, if I have to get behind a deal, let's say, you're going to want to look at the credit quality of the borrower, right? That's the first thing you look at. So if you're thinking about borrowing against a card, you're going to look, okay, where's the credit quality? I mean, there's no credit quality. The credit quality doesn't matter, because the person you're evaluating the collateral is card, right? So the card becomes the collateral, and the card itself, now you evaluate that. That's the other piece. Well, cards don't really maintain. Cards are so volatile, and I'll be honest, they've been around for a long time, but the recent uptick, the bubble, the burst of value from 2019 till, and then kind of coming down, that middle finger we talk about, if I'm looking at that, I'm probably nervous about the kind of money I'd want to lend against a card, because I think like the loan to value is going to have to be really low, because the exposure you're going to have giving someone more money where you know they're going to go use that money to go buy another card, to me seems, I just feel like you're just basically digging a deeper hole, because now you have to use that money wisely to buy the other card. So it almost, what matters is if you're lending money to somebody and it's based off of a card to collateralize to go buy another card, now you have to think about, well, what card are you buying? So then as a credit, if you put your credit hat on, you're going, okay, what card are you going to buy? You almost have to underwrite both purchase, the borrow and the purchase. So it gets really convoluted if you start thinking about it from that perspective. From just a normal layman's term or layman's point of view, I would be nervous trying to lean into like actual value of the value of a card right now, seeing how everything has gone down so much, even bigger cards.
Yeah. So interesting comments there, and appreciate you kind of contextualizing your professional experience. The way I look at all that is, if I'm going to lend money against a card, as you said, low loan to value ratio. If the card is worth $100, I'm going to want to protect my lent money by loaning out, say 40%. I think that's I have a feeling that's what some of the lenders in the space are doing or have done on a loan to value. But then it comes down to, what's the value? Who's assessing the value? Is the value being assessed by the lender? Obviously it is. The lender is going to say, here's what your card is worth, what we think it's worth, and how close to the actual current fair market value are they going to come. If it's going to be actual based on some recent comps on a liquid commodity type card, then 40% I think is pretty safe for them. At that point, now I have your card worth $100. I've given you 40. If you default on your payments, that's kind of good for me as the lender, because now I'm going to have this card worth 100 that I'm into for 40, minus selling fees and all the other transactional costs that are involved with setting up the loan in the first place. So that to me is a pretty good deal for the lender. For the borrower, you really, to me, have to be in a cash crunch in order to use that. And actually, I'm going to go to a comment here. Cage makes a good comment right here. It says most companies operate on debt. Like most to all companies have debt on their balance sheet. It's just common, right? He says, so it doesn't seem odd for the investor segment of the hobby to operate on debt. And they can service their loan. And for the I shouldn't say they. We assume they can service their loan because he uses the term investor segment, and I think that almost connotes some borrowers that have the ability to service their debt. Now, whether or not that's true,
because there's a debt service, like when you're underwriting a commercial loan or an operating line of credit that you have to pay back, there's a debt service number that you arrive at to show whether or not you can service the debt and do it. And you have to have, a business operates on debt very differently than Dennis, who just wants to buy that really cool Ken Griffey Jr. car, and I'm going to leverage this card over here to go buy it. But boy, from my perspective, I'm leveraging. I don't own that card anymore. PWCC owns it, or Alt owns it, or whoever else. Now I don't own that car, just like as much as I don't own the house I'm living in technically. I don't own the car I'm driving technically. So cards are kind of neat because you can eliminate that piece and go, I'm going to own them. Yes, if you have credit card debt, I suppose you still don't own them technically. But I don't know. It gets tricky though, because even in my situation, I'm using cards that I bought and consolidating them to buy some of these cards. So technically, I'm just basically spinning negative equity into trying to spin it into positive equity. This can get really convoluted, but I'll back out of that a little bit as I digress. But I think companies operate very differently than just maybe an investor.
For sure, because companies also have ongoing revenues. They have other things going on. If you're just borrowing against a card, that's a silo, that's a vacuum, that's in a vacuum. It's all it is right there. Unless you're borrowing against several cards. It is a completely different thing. But I think Cage's point was that people with the mentality who manage companies, shareholders of companies that operate on debt to run their daily business because they need it, because there's cash flow is cyclical in many companies too. I think it's a mindset thing he's getting at versus, it works in companies, it should work in sports cards. That's all I think he said. Let's go to a couple comments though. Dennis, we've got some. First of all, Joe Barrett came in before we went live. Joe, we're not discussing Barry Bonds cards today or scarcity or market control. However, I do like the topic of and Dennis and I talked about, we like the topic of controlling a market based on hoarding for a separate, a different episode of the show. EL, good evening to you. Joey O'Hearn, good to see you back for a live. Thank you for joining. Philly Joe says, bring it like last week. Yeah, last week was a lot of fun. And thanks again to everybody who joined us last week on the show. Cage says, Dennis owes me money. He's just kidding around. We got Brent, who was my guest on Sports Cards Live this past Saturday, just 3 days ago. Deep Value Investors, as leverage comes out, we can have price discovery. Once a big-time collector or two stop borrowing to buy cards for a specific player, true values will be known. I'm not sure that I'm putting that whole comment together right now. Can you, Dennis?
Yeah, Jeremy. Yeah, Jeremy. I was kind of I was looking at that earlier, and I'm just guessing. And Brent, chime in if you don't think we're getting this right. But I think what he's saying is you're a couple big players in the market. If they stop, leveraging cards they have to buy new cards of particular players, we're going to find out what the true value of the market for that particular player is, especially in the higher end cards. That could be true. I don't know how many people are borrowing against their cards to buy cards. I'm not mistaken. PWCC, I think they recalled their loans. I'm not sure. I don't have that data for sure. I don't have the specifics there, but I don't know. It's hard for me to think there's that many people leveraging their cards to buy new cards, especially based on the comments and all the DMs I got after the last episode with my buddy Joey. It seems like most people aren't doing that. So I'm not sure if that would actually be the case.
Well, PWCC must have extended several loans. Alt has recently entered the space. You had Investicard, Eddie, the We Are Live guy who was doing that quite a bit. He had Marcus Lemonis as an investor in that business. So I think there's a business model there. I just don't know that anyone has either done it right yet, or when they've done it in what was first a bull market that turned into a bear market, and they got hurt. So the timing is everything, and that's why loan to value ratio is so important. 90s hockey collector, good evening to you. Stukes in the house, loud collector in the house. Philly Joe says, I'm very adverse to using credit, especially credit cards. However, never say never, and sometimes credit becomes necessary. Mike Petty says, I was always taught to operate my business with cash. I guess I'm stupid having zero debt. You said that, Mike Petty, not us. I guess I'm stupid having zero debt in my business and my life. I must be doing something wrong. No, I don't think you're doing something wrong. I think you're operating a small business. Like if you are a sole proprietor and your business, you're a plumber, you're an electrician, you're buying and selling sports cards, you're a caterer. There's all sorts of small companies that don't need debt because you're running efficiently. And you're also not growing. Debt is often used in growth stages. If you're not going to grow by issuing equity to investors to get money to grow, and you can't self-fund, your only other option is debt. So if you're not, it just tells Mike Petty, it just tells me that you're probably not running a business that is growing, is probably why. Now, unless it is growing and you're just really successful and you have a ton of revenue and you're self-funding your growth, then congrats to you, man. You're doing it right. Ziggy says, great conversation. It's like providing a home equity line of credit to an igloo owner in Phoenix, Arizona. I mean, that's an extreme comment to describe what's happening, but that is pretty accurate if you're looking at how the market has gone over the last couple of years. We said earlier, if you are lending money on a sports card that's worth $100 at a 40% loan to value ratio, so you're going to lend $40 on that $100 asset, and then the market comes down like we've seen by say 80%. Now your collateral is only worth $20. Your borrower is going to say, well, why am I going to pay off my loan when I don't want my card back. It's not worth it anymore. It's right. Like I sold you a $20 card for $40. I'm out. Right. So
right. It's much easier to walk away from a card than your house. So yeah, you got to keep that in mind. And to Tom Petty's point, it sounds like he's in a mature business that's not trying to scale, like you said, to try to grow. So yeah, being cash, there's a produce company over in Washington State, and they're very successful, and they don't use debt. They don't use debt at all. They operate all with cash. But man, they also are limited in what they can do. So
yeah. B-Mac joining the show, opening up some cards. Good to see you. Welcome. Childhood Greats says companies also get the benefit of offsetting interest and depreciation of that asset against its income per tax law. An individual leveraging a card doesn't get those benefits. Well, you should get those benefits on the if you're running your card business through a registered entity like an LLC or some sort of corporation, then you're going to get all those business deductions that any other company would get. But Childhood Greats does say companies also get. Now, I don't know how tax law works. I used to practice some U.S. tax law, but that was over 15 years ago. I don't remember how it works as far as if you are a sole proprietor and what sort of business deductions are you going to get in a sports card business. So true what Childhood Greats is saying, but I think there are ways to get some of those benefits as well in the card hobby. B-Mac, you wish I kept all my sealed stuff. Yeah, I think a lot of people do. We have a Facebook user here, says just tuned in. Wanted to state that Alt has been doing loans for a couple years now. Think it's just something that individuals are just now seeing it more. Yeah, fair for sure. Ziggy says maybe these guys are actually short selling cards to PWCC, grabbing cash for cards. Yeah, I mean, maybe that would there's a lot of risk in doing that though. So I think you'd have to have some I don't know, a set of steel to be doing that. And Spectre Fitness, there's no business for leveraging cards. These businesses are trying to act like cards are a stock market. People need to face reality. Sports cards are illiquid. If you need cash, it's tough selling. I mean, we hear comments a lot in the hobby how it's sports cards aren't liquid. I'll tell you what, I see people turning cards into cash in 24 hours. Is that not liquid? Like what?
I would say I agree with 50% of his comment. Yeah. There's no business for leveraging cards. I agree with them. These businesses are trying to act like cards are a stock market. I agree with that. I've never really felt like the cards are the stock market. There are certain cards I feel like sort of rise above the rest, like the 52 mantle. If you hold a 52 mantle, Cage, I know you hold one of those. If you hold a 52 mantle, yes, it's harder to walk away from a card like that. Or, I mean, name some of these cards that are just massive. It's harder to walk away from some of those cards. There's just a handful of them. And those cards, I believe, can act like fine art. They could act like an alternative asset, but most of them don't. So I would be nervous about that. So Joey's in the live. So yeah, we got Joey live in the comments there. So you fire your questions at Joey. He's there. But anyway, yeah, that's what I believe.
Yeah, I mean, it's the hobby. Sports cards are certainly not stocks. I mean, that's like saying corn on the cob is not a car. Like, of course it isn't. It's they are different, but that doesn't mean that they're not. We've done the investment episode already. Sports cards, we know, can be an investment. It just depends how you're approaching it yourself. It's really up to each individual. But here, another comment, he says they aren't liquid instantly. It takes time to sell. What I want to sell is what I want to say. People are offer cards, pay 75%. Yeah, but 75% is still liquid. And you can put a story post up on Instagram and have cash in 24 hours from somebody. You can consign cards to PWCC, or you can sell cards on eBay. You can set up at a card show. If you're every week and have a card, you can convert your cards to cash within a week. If you're going to card shows, cards are more liquid than I think people want to say. I don't know why there's this big narrative that cards are not liquid. It just depends how you're selling them. Even, if you're consigning them to an auction company, it's going to take a little bit longer to get paid out. That's for sure. So it's not as fast as flipping a stock on your account, on your digital account, but it's definitely possible. Joey says leveraging 100% should be in. I don't know who's going to lend you 100%, but okay, Joey. But we do know from your collector series episode that Joey was and did borrow. I think I listened to the episode, Dennis, and it seemed to me like he worked with all three of these. He worked with Investicard. I think he worked with PWCC and Alt, or he looked into Alt. So if anyone does have questions on it, fire some at Joey Peapod here in the chat or on Instagram. He's on Instagram as well. BMAX says prices fell ridiculously, but still a lot of value out there, just not crazy. Like that's the thing. Like right now is probably a way better time to be a lender against cards than 2 years ago, because cards have come down so much. It's like, can they keep coming down? Of course. But I think we've experienced the majority of their decline in value over the last couple of years, but tough to say. I can't guarantee that as well. Keeping going through the comments here, Dennis, but go ahead.
I was going to say, okay, so you talk about leveraging cards, but it also brings up the fractional. Brian Smith has a comment here. Has anyone bought fractional ownership of cards? What is the status of those companies? I don't know. I'm not going to speak to the status of companies, but you do bring up a very interesting point about fractional ownership when you talk about leveraging cards and how you can own cards. It's different, but it does sort of bring up that mindset of like, okay, was fractionality of a card? I feel like, again, it's just a specific card. You're not going to want to own a fraction of a card if you're a collector anyway. I think that's a purely an investment play, but I only think there's only certain cards that you can do that with anyway. So that kind of almost played itself out. I think there's going to be some trial and error stuff, but I'm actually wondering, have we seen the bottom? Do we feel like we're in the bottom? Is there going to be more of a correction than we've already seen? I mean, okay, I'll geek out on Fed. The Fed basically, the two things the Fed really wanted to accomplish with what they've been doing is to soften, to ease inflation, right? And the cost of things. They wanted to ease that down, and they wanted to keep employment strong. Well, employment's still strong. So there's the unemployment at least in the United States is actually really strong. It's probably stronger than we think with people taking second jobs, working remote. It's probably stronger than we think. And then the other piece of that is, okay, so things are still costing more money. So that hasn't happened yet. Because things are costing more money and because we still have employment that's pretty strong, does it feel like we've accepted what things are? And we know that they're not going to keep raising interest rates, at least for a little while now. Do we see a correction happening? Do we see that the correction ending? That's something I was thinking about today when I went to an economic forecast launch today, and that's something that was on my mind. I was thinking, okay, are we at the end now based on these things?
And I mean, that's the thing. Who knows? And I would never say we are at the end because I don't time markets very well, nor can I predict it. I don't think any of us really can. But you have a lot of people have their feelings. They're going on their gut. They're going on experience. A lot of people have been through a lot of cycles over time. So it's tough to say. My thoughts in terms of fractional, what is the status of those companies? I know that Collectible, who I used to do a show for, I shouldn't say I know. I'm not sure. I think they're done, but I don't really know for sure. I know all of their principal people are no longer there, but they still are they still exist as a legal entity. So that I believe is the status. They're still Rally, but Rally is diversified into more than just sports cards. So I think they have a better chance to survive. And but yeah, I think the timing was wrong for that. It didn't work out. And then of course the market turned, and that wasn't good for a lot of companies in the space, including the fractionals. Ziggy says, if we agree cards are bad to leverage for loans, can we start to see? Did I just have that one up there? It feels like that's the same one. Let's keep on going. Jeff Hart, cards are liquid, but you may not get 100% of what you want if selling needs to happen immediately.
This is true.
It's true, but still, and Jeff isn't saying this, but it's important. They are still liquid. Even though you're not going to get what you want, that doesn't mean they're not liquid. They're still liquid. They're just not liquid to the amount that you want. Cage says corn powers cars, though. Well, yeah, Cage. I don't know. We had corn on the copper dinner. That's why it came to mind tonight as I was trying to come up with an analogy quickly on the spot. So here's a hot take. Joey Peapod says cards are like stocks 100% if you are buying the right stuff. So, I mean, in Joey's mind, maybe the way Joey approaches stocks is how he approaches cards, but I don't think they are 100% like stocks. Maybe they're a percentage and maybe it's a high one, but they're not 100% like stocks. There's a ton of differences between the two. So Joey, I mean, I appreciate the comment, but I just think I don't think it's accurate. I think they're similar in some ways, but certainly not 100%. And maybe that's what the word like is. Maybe you use the word like, so maybe you don't mean that the way I'm interpreting it. Joe Barrett says it would be more liquid if fees were lower. Again, that doesn't impact the liquidity. That just impacts your return. That just impacts your revenue, your sales price. It doesn't impact the liquidity. It actually, because there are companies out there that take fees, that increases the liquidity. If they weren't companies in business to earn fees, and they wouldn't be if there were no fees to be earned, then it would be less liquid because you'd have fewer options to sell your cards. Think about going to a card show. At a card show, you're paying a fee to be there. You're paying the promoter. Fewer card shows, less liquidity. So I disagree with the comment, Joe, but I just don't think you mean it the way you stated it. But maybe you did, and then we disagree. Loud Collector says cards are very liquid depending on your price point and loss, cost, fallacy, temperance. Throwing out some psychological terminology here that I'm not familiar with that fallacy, but I think that makes sense to me from Loud Collector. Mm-hmm. And then here's a really important question from Ziggy No. Says, Joey, would you do it again? If you had $100,000, would you buy collections or loan cash to card buyers and play the house position? Well, I'll tell you what, Ziggy, from listening to Joey on Dennis's show, he would not play the house position because he also plays blackjack for a living, is what I took from that episode, Dennis. And if you're playing blackjack for a living, you're playing against the house that always wins. So I don't think he would take the house position. Dennis, do you have any insight into that?
Yeah, no, I think Joey's very confident in what he does, and he's been doing it for a long time. I mean, I think there's, I'm very conservative. I would never do that, but he's more of a risk taker than I am, and I think he actually has, he's been doing it for a while. So I mean, he somehow is staying where he's at. So I mean, it's good. It's good for him. If that's comfortable for him, each their own. But what I took away from that was, he was able to. There's a bunch of things that happened there. So he basically answered the call that cards can be liquid because he sold all his cards. But just like that one comment, he didn't get 100% of what he wanted on a lot of them, but he still made money on a ton of them because he got in so low. So he wasn't hurt as bad as everybody probably thought he was. He's fine. It's just how he puts back together a collection. I mean, it all depends on how you do it. Guys like me, I'm going to go try to buy the nice card from somebody like Joey. I'm going to try to buy the nice card from one of you folks in the live that has a really good card and a high grade that I desire. Where maybe Joey will go buy a raw copy or somehow find a raw copy because he knows a lot of folks within the certain, player collecting community obtain that card and then grade it and get the grade, be able to find the card, a good looking card, then grade it, get the grade you want. That becomes now a valuable card to maneuver. And so I think the way he does things is very different. And he can get on the comment section here and elaborate further. But that's what I take away from all my conversations with Joey is he understands the market. He knows what to go buy and how to do it and how to grade. He's been doing it for a while. He's been doing it since 2010. I mean, I've been in the hobby, as a novice, like I keep saying, since 2019. So I really, I listen to people like that, and you can take nuggets of advice from everybody. You don't have to agree with everything they do. You don't have to do all the same things. It's great to learn from different people. I think Joey has got a ton of expertise in the hobby, in the space. He knows cards. He definitely knows the Griffey market inside and out. And yeah.
And that's all I got there. The Griffey would be a Pareto player. Now, I did receive a comment on the episode I did with Brent Wire, the deep value investor last week, which is someone said we're saying it wrong. It's not Pareto, it's Pareto.
Pareto.
Thanks for clarifying, but I think I'm going to stick with Pareto. It rhymes with burrito and it's just more fun. So, and if Mr. or Mrs. Pareto, who came up with the principle, is no longer with us, which I think is a fair assumption, then they don't know the difference anyway. We have Rob Gerard, the sports card therapist, in the house. Rob, good to see you as always. Spectre Fitness says, I think it's a good time for selective buying of highly sought after cards for GOATs and young superstars with a future. So I think that's a fair position to take. I think that's I'm not going to argue with you if that's what you want to do. And I think a lot of people do that. But when we talk about young superstars of the future, we don't know what the future holds. And when it comes back to leveraging, borrowing, lending money against cards, when you are lending money against a player who is still active, who has a lot of built-in value built in based on not yet won championships, not yet awarded MVPs, these sorts of things, not yet broken records that people think are going to be broken, and then those things don't happen in the near term, we see values come down. We've learned that really quickly. So, and you can still be a GOAT and your values can still come down. Look at LeBron James, look at Tom Brady winning the Super Bowl. Only helps for like a week until you win the Super Bowl. And then look at Patrick Mahomes. That what Patrick Mahomes would fit into what Spectre Fitness is saying here. If you lent money on Patrick Mahomes at anything over 50% loan to value the week before he won his Super Bowl, your loan is underwater now, and your borrower is probably going to walk. So, but that is talking about leverage, which is the topic of the show. As for Spectre Fitness's buying strategy, I think it's a good one. And as Brent Wire will tell you, make sure you're buying the right cards, because a lot of players have all players have so many different cards right now. Not every card is going to be valuable. I'm not as extreme as Brent is, where I think there will be more cards that hold value than he does. That's fine. We can just move forward on that basis. But still, the Pareto, the top 20% or top 1% of cards, whatever it is, just make sure you're buying ones that you're comfortable, people will like moving forward.
Yeah.
Ziggy here says most cards today will continue to decline as they fade in popularity, which is consistent with what Brent would say, but there will always be new records, new chase cards, new once in a lifetime rookies. The hobby is strong. Yeah, I can't really argue too much with that. The first word in most cards is definitely true, because you got to think there's billions of cards printed every year. I heard somebody once said there hasn't been a billion cards made in history. It's like, how many cards did Pokemon make last year? Like 6 billion themselves. So, but he's right. Most cards will just be not valuable. Dennis.
I see Childhood Greats has a great comments. I know I'm really top of mind is all the economics of our country anyway. I'm not sure how it's looking in Canada for you, Jeremy, but right now we're still under 4% on our unemployment rate. And so that the point I was trying to make is like, okay, if unemployment rate is still low, that means people are still working, they're still earning. Inflation's still high, but there's still been a tolerance to where, we can still purchase these items to employ the workforce. It's common economics, right? So, but where do you get to that point where people start going, you know what? I love hanging out. Like you and I talked earlier, right? I love hanging on to this card, but boy, I sure love the cash more. And I think some of the true collectors, I shouldn't say true collectors. That sounds elitist. I'm not going to use that word. We all know Cage is the elitist in the group, not me. The hanging on to cards that you can't get back. Meaning there's a card that you're like, if I sell this card, yeah, I can get this cash, but I likely won't get it back because it's like a pop one, or there's hardly any of them out there. Those are going to make you think long and hard. But I think when people start making those types of decisions, maybe they already have, that now you cross into this, okay, now stuff starts really dropping down. And that's what I'm nervous about, to be honest with you, and why leveraging on or borrowing against cards to me seems so scary, is that maybe we haven't seen the bottom yet. And it's going to go down even further. And it's going to make a lot of these purchases that a lot of folks have been making, including myself, the last couple quarters, because we feel like we're able to pick up some really strong cards for, discounts, but maybe they weren't really discounts. Maybe there's more of a correction still coming. It's just that we bought in to believe that some of these cards were actually 2021 prices, and they really aren't 2021 prices. They've dipped now, and they're becoming the price they should be. And besides these mantles and some of these really big cards that will maintain and pretty much get through most cycles, those particular cards, a lot of the ones we can afford and own, like Dustin would say, the ones that most of us can afford and buy and own, are going to be depressed even further.
Well, that's the thing, right? We don't know where the bottom will be. We could go up, we could come back down. There's going to be cycles forever. So yeah, it's a tough thing to figure out. Deep Value says stocks trade in a market and cards can trade in a market. Even corn trades on a marketplace. Yeah. Tip of the mitt. What in the world is going on here tonight, fellas? Good to see a tip of the mitt. Rage, good to see you as always. Perk says, I think there is a higher level of freedom and enjoyment when you are not paying interest on your collection every month. Yeah, like no doubt, right? I couldn't imagine paying interest on my collection, but that's the thing. Perk uses the word collection, and I think people, unless you're really in financial trouble, and as we said earlier, you don't have good credit and it's hard to get a credit card or to borrow money, you can't get a home equity line of credit or just a credit line from your bank, you may have no choice. If you're card rich, cash poor, and credit poor, you may have no choice but to collateralize your cards. Now, the other case is where people are doing it, but they're not collections. They are simply inventory to these people. And that's where Perk, you, me, Dennis, a lot of the collectors in the room, we don't want to pay interest on our collection, but we will pay interest on capital assets that we are using or inventory that we are using to generate cash flow. It's a kind of a different way of looking at it and a different thing altogether.
Yeah.
Some great comments, Dennis. We're going to go keep on going. Okay. The professor says Teapot from Market Movers had a nice episode demonstrating that a card may be down from 3 years ago, but if you bought 5 years ago, you are still up multifactorial. And that's the thing. Like, this is a common thing in the hobby. If you can zoom out and say, listen, if you got in 2020, 2021, you're underwater. But many people got in way before that and are up multi. So, example, I bought a card for, I think, $4,800 in like 2015 or 16. It went up to 90K at the peak. Now it's down to about 45. I'm in for $5,000. It's worth 45 today. That's a 900% return. I'm okay. Do I wish I sold it at the peak and rebought it now? Of course I do. But I wasn't in selling mode. And it's also tough to sell when you see things going up all the time. At least it is for me. Ziggy makes another comment right over here that relates to that. How many cash millionaires did the 2020 boom make? I think he's saying it tongue in cheek. Where are all the Joeys that know the hobby so well sitting on stacks of cash? I hear so many talk about making money, but few make cold, hard cash. It's a good comment because I think it's true. A lot of people that held cards pre-pandemic saw those values go up and now they've come down. Now they started here, they got up to here, and now they're down to about here. So there's still a delta there, a positive delta. But again, this is unrealized. Those gains were unrealized. This gain is unrealized. If they're now down here, if you bought in 2021 and your value's down here, it's an unrealized loss. If you have the stones to hold it for another, whatever that time period is going to be, 5, 10, 15, 20 years, you might get back up here.
And you and I are at different ends of the spectrum here, Jeremy, because you've been doing this for a lot longer. And so you have a lot of these cards that are worth quite a bit more than 900%. I have cards. I'm probably breaking even now. I think if I liquidated, even with all the really great cards I feel like I have and I've colored up to, who knows with fees and taxes and what the demand is right now. If I had to sell right now, I bet you I probably lose money still. And that's the difference between you and I and where we sit. I'm not going anywhere, and I love where I'm at, and I'm not blaming anybody. No, I'm not a victim in any way, shape, or form. But, I'm going to have to hold. I want to hold, though. That's the thing, though. I want to hold because I love the cards I have. I don't want to sell them. I love them. So, let's pretend I'm not in that situation. I have to sell them. Well, that's going to hurt, And I think that there's a lot of folks out there. Maybe this is a transitional opportunity and segueing into another piece of our episode. This is how a lot of people I think are feeling. There's a lot of people like me that, like we've talked about this in past episodes, that are kind of feeling it a little bit, right? And some of them are going, you know what? Like there's been some comments in here. My kids can't eat cards, right? So they're making decisions, and I think that's affecting the market. And some people are like got hurt enough where they don't want to do it anymore. So, but I still feel like the market's the hobby's strong. I think there's a lot of people that are very much into this whole space, and they enjoy it, and they're here. Look at this live. This is great. So, but I think there's two different types of people that I think I believe that are in this hobby, in this space right now. There's the people that have gotten in recently that might have been, they might feeling it a little bit. And there's the folks that were here before that are feeling pretty good, and that is just kind of how it is.
Yeah. Loving and I bought through the pandemic, and I'm down on some cards, and I'm up on cards from before the pandemic. I'm up on some cards that I bought during the pandemic because I think I'm a savvy buyer, but you can't win them all. I've set records. I've set several records, and some of those I'm still up on. Some of them probably not up on right now. And I also don't like to keep tabs on the values of all my cards because I want to enjoy the cards and not worry about the value all the time. So, but that's a lot of people do. And I understand that too. David Thompson here says everyone who sold in 2021 made the dough. No doubt. If you sold in 2021, especially the second half, you made the dough. Joe Barrett says, I'm just happy my wife hasn't left me over card. Happy for you too, Joe. Definitely. MMA rookie card says victim mentality is strong in the chat. It's strong in the hobby. Let's be real there as well. MMA. Okay, I'm gonna go back to some earlier comments. Dennis, we've got a lot of good stuff here. Jeff McCombs, first of all, thank you. Welcome to the show. Cardi C, haven't seen you in a while, says leverage in and of itself isn't bad, but you need to make sure that your debt service payments aren't unmanageable and you have 100% confidence in your ability to outperform your interest rate. Cardi C is a CPA, smart guy, knows what he's talking about. Very good comment, I must say, because your ability to outperform your interest rate, so well said. And if you can, I don't know. Yeah, I don't know how you would have that confidence in this if you're borrowing against your cards in order to buy more cards. I mean, you really have to be confident. I don't know what else to say. I don't have advice on how to make that work. I don't have advice on what cards to buy that way because the market is volatile. Spectre follows up. I agree with you for sure. If I was in the leveraging business, you need to run a ton of numbers on players that have built-in value. Lending against those are high risk. Yeah, like I would never lend against Luka, Tatum, Zion, Ja, almost any active player, really, except maybe Steph, maybe LeBron today. But even that, I don't know. Cage says, how much would I have to give every single person in the hobby to never use the word Pareto again? Cage, send me $1,000. I'll stop right now. I'll never use it again. I promise. $1,000. Send me PayPal. MMA, hello to you. Cardi C, another comment. Problem with card lending is that you're borrowing against a collectible or a speculative asset. The risk requires lenders to charge such a high interest rate that there are likely better options. Well, I love the comment from Cardi C here, but there are going to be cases where there are not better options. There are people out there that might have $250,000 worth of cards, but can't get a credit card, can't get a home equity line of credit, maybe don't own a home, so they can't get a HELOC, they can't get a credit line, and that might be their only option. Thank goodness for them, they have some cards. So they can actually use that. And but in that case, is it like the whole thing that especially Investacard's sales pitch was keep owning your cards, but get the cash. Like take cash out of your cards, don't sell them so that you still own your cards. Well, okay, great. But you are paying the interest. And actually some of the risk is transferring to the lender. But then I still say, why don't you just sell the card? And that's going to be what you're willing to do. I mean, I'm not going to tell you, why would you sell the card as if I'm assuming you should. Maybe you just love it so much you don't want to, and that's fair, but you got to manage your risk there. Dennis, anything on all that?
Well, yeah, I think that, okay, so when I apply for a loan and you put down, things that are of collateral, I've got a Shelby GT350R and I own it outright, that goes down as collateral on my application. I put down the equity I have in my homes. They're the collateral I have in those that's something that could be recognized in an old loan application. In the cash I have in the bank, the liquid stock, whatever it is, or your life insurance and however much you're vested in it. Those are all things that can be realized on and appreciated on a loan application when you're being underwritten as a borrower. My cards cannot be. I cannot put my collection of sports cards in there. I don't know anybody who recognizes that's going to lend you money outside of some of these platforms within the hobby space. So when we want to start really understanding, if we really want to start, if they want to be taken seriously, if you want that, this whole space, that's not happening. So that's why I struggle to call cards stocks. I struggle to call cards alternative assets even, really. It's harder for me to do that when you can't get an underwriter to recognize the value you have in these cards. And they'll say, well, they need to be appraised. Well, are they being appraised using Card Ladder or Market Movers or one of these, third-party services that can help you evaluate a card, its price? I don't know. That's where I don't know if that makes sense, if that ties in enough, but I just thought of that when I'm like, okay, when I put all that stuff down on an application, I don't recognize my cards. I don't put my cards down because I know they're not going to recognize them as value. They're not going to be able to collateralize them if anything ever happened to me.
Yeah. Yeah. Fair. Chris says it was almost 30 years between booms. History tends to repeat itself. I certainly agree with that comment. I think that's very, very true. Childhood Greats tried to turn his collection into a collectible insurance policy with a cash flow stream, but they wouldn't do it. I'm not surprised there. Facebook user says, when we talk about the ability to outperform our interest rates, are we no longer in a hobby? We are in a hobby. The hobby is part of an industry. I have a whole Instagram reel on this. Check it out. I'm not sure who this is, but if you don't, if like, you have to realize, everybody has to realize the hobby is not just a hobby. It's much more than a hobby. It's a business. It's an industry. It's always been a business since 1888. It's been profit driven. It's always been profit driven. So just kind of, you got, it's almost like, and I don't know who this is, so I'm sorry, but and don't take this personally, but like, grow up. It's not only a hobby. It's never only been a hobby. Now, for some people, it's only a hobby, but you're making it a hobby for yourself within an industry, a profit-driven industry at many, many different levels. So I'm not saying to that person grow up. I'm saying to everybody who makes a comment like that, like, it's not a hobby anymore. It was always a hobby within an industry. LGC says liquidity is measured by how tight the bid and offer is, such that it's very liquid to get arbitrage in a very liquid market. If you get 70% to get cash, that's purely an arbitrage market, not a liquid market. I guess we're just defining liquidity. To me, LGC, liquidity is how easy is it to convert your asset to cash, not at what rate. So maybe that's one definition of liquidity, but it is certainly not the only definition of liquidity. And maybe that's where the disconnect I'm having is, because I'm talking about the ability to turn your cards into cash quickly, which is very easy. And you can get 90% a lot of the time. Depends who you're selling to. Depends if you're selling retail or wholesale or desperation. But there are lots of ways to get more money than 70% on your cards, I believe. You're laughing at something, Dennis. What were you laughing at?
Oh, nothing. Nothing. It's all good. I'm not gonna. Yeah.
All right, let's keep on going. David Thompson, when you start borrowing to buy cards, you're asking for trouble unless it's a spectacular deal. I agree with that. Like, if you're buying a collection from somebody and you're paying whatever, anywhere between, like, at the low, like some collections you can buy. If you're buying a 1 million card collection, what do you think? What should you be paying? I'll tell you what, you shouldn't be paying 50% or more, because you're going to spend thousands of hours on that. You should be buying that at like 35, 40%. I would think. Otherwise it's not worth your time. What do you want to make? You want to make $5-10 an hour? No, I don't think anybody here wants to make $5-10 an hour. So you got to buy right. And I think that's what Dave Thompson is saying there, a little bit at least. Ken Summoner says, what are the rates these guys charge? I've never looked into it myself. I don't know what the rates are. Joe Barrett says lenders need to ensure they have adequate loan loss reserves. Yeah, no doubt about that. No doubt about that. Rage says, when you're borrowing like Harry the wig shop owner in Goodfellas to pay off all the debt in the neighborhood so Joe Pesci doesn't come, it's a bad idea, I would think. Oh gosh. Okay, now we're seeing some back and forth in the chat. We're just gonna I see what you're laughing at now, Dennis. David Thompson says, I've been collecting since 1969 and sold about 50 cards, and now I wish I never sold, including a beautiful rookie Gretzky. Yeah, we all have those stories, David Thompson. No doubt about it. No doubt. Ken Summoner, would be cool to have pawn-style setup where a higher loan to value can be given, but cuts off at 60 to 90 days so the person can keep the collateral. I'm sure that's happening out there. I wonder, and I think from listening to Joey on your show, Dennis, speak, I think he mentioned, I forget which service provider it was. I think he mentioned every 90 days he had to renew the loan. And that I found very interesting. I found that to be very safe for the lender. So I think that was probably a good strategy for the lender there.
Yeah, I'm going to have Joey back on. We're going to do a follow-up episode to everything, because I feel he wants to clarify some things. And So we'll have a follow up to that. We've already been talking about that, so that'll happen. But I think we talk. I don't know. I don't want to shift gears too hard here, but we talk about leveraging for cards. Okay, let's pretend you're going to leverage. Pretend you're going to borrow against a card. We're talking about it right now, where things are a little bit more uncertain, and you pay whatever the percentage is. You got Spectre Fitness here. The rates that lenders ask are predatory, about 15%. That's a lot, but the risk is high for them, right? Who are you borrowing? Like, what players? I won't use the word because I don't want Cage to find me and beat me up. But what cards and what players would you feel comfortable borrowing money against? In what grade? I mean, I'll throw it to the chat, guys. Fire away. What cards, what players are the most collectible? The cards you feel like, you know what? If I'm going to borrow money against a card that I have, what cards do you feel will perform well? That can outperform a market? What players? What cards? That's the kind of stuff I think about, because I'm like, okay, what cards are actually going to? Yeah, those are my thoughts.
Yeah, that's a great question, Dennis. And my mind goes immediately to two things. First of all, okay, what players are they? My mind goes to the goats and the goat cards, right? Or the Pareto cards, the goats in that, right? The Jordans, the Gretzkys, the Bradys, the LeBrons, the Mantles, the Jackies, those kind of cards. But you can't just pick the cards. You have to pair it with a time horizon, because I wouldn't be comfortable with anything if I'm only borrowing for 90 days or 30 to 90 days, because anything can happen in such a short amount of time. But if you're going to talk about a longer time horizon or term on the loan, which I don't know, I would never do it, but then I'm thinking more like, okay, like a 5-year term, maybe then I'd be a lot more comfortable lending and borrowing against. But I would never want to pay interest on a card for anything more than a day, or I just don't want to pay interest on any cards. But I'm also not in a position where that's my only source of capital is to leverage my cards. So it's hard for me to understand the psychology of somebody who is in a more desperate position, that's their only option. Because I can't imagine putting myself in that position in the first place, never mind having to act upon it. But there are people in those positions, and I hope the best for them. But here's some comments that have come in.
Hey, Jeremy, real quick, before you launch into those comments, I'll let you do that. My battery is about to die on my computer, so I'm going to go grab my power cord. I'm going to professionally exit my camera quick here, and I'll be right back.
Sure. Leave me alone here. I'm messing. We're good. So we had a couple of answers to here. We'll just do that until he comes back. Wally Joyner. We had any Cobb. I mean, Cobb, like any of these, super Hall of Famers, top end Hall of Famers, and their best cards. Yeah, I mean, this is where, sorry, Cage, but this is where Pareto comes into play. And now that, to me, is just becoming synonymous with the best cards of the best players. And simple as that, without defining it any further. But that's where I would be going. If I'm as a lender, again, I just can't get my head into the mindset of someone who borrows against cards. My mind doesn't allow me to go there. I can't imagine doing it for myself. So, but I can imagine lending, because to me, you're the house, and the house always comes out ahead. So that's where I would be lending against, would be the best cards or the best players, unless I can lend at such a low value and charge such a predatory rate. In which case, I don't want to be in that business. I don't want to prey on desperate people like that. So it's tough. MMA says 1-of-1 superfractors of Hall of Fame players. Are there any Hall of Fame players that have 1-of-1 superfractors? Playing days cards. I don't think there are yet. Are there? Maybe there's a few I can't think of, but there must only be a few. Wally Joyner, love it. Rage says Mantle, Ruth, Mays, Jordan, Griffey in high grade. I mean, that's one of the things that we talked about with Brent the other day. That Brent said was, only the highest grade of the best cards of the best players. I think there's still good value and potential for value returns on mid-grade great cards because so many people that love the hobby can't afford the best of the best of the best. Only a handful of people can. So bring Dennis back on. I'm not sure if you caught any of that, but just talking about a few of the options. We had any Cobb, we had Superfractors Hall of Famers, to which I said, I don't know that any Hall of Famers have Superfractors yet because their Superfractors is too new almost, but there might be a few. Rarity probably outsells GOATs. I don't know if it's not. I don't know about that. I think the player is the most important thing on a card. And then you get into things like how it looks and rarity and condition. But the player is so important unless
I think
even Johnny Moore won't last. That won't last. I just can't see it.
No, it won't. I think that that's a perfect example, the Johnny Moore card, right? That's a set registry type of deal. I think it's the player matters. I would lean into the player, and in the important cards for that particular player on the highest grade you can afford. I feel the safest with those types, like Michael Jordan, Wayne Gretzky, Mickey Mantle, Babe Ruth. I mean, Kobe Bryant, LeBron James. I like to think Ken Griffey Jr., maybe Tom Brady. You start thinking of the best players, and you can kind of go into a tier below that where you got like the Joe Montanas and, maybe the Shaquille O'Neals or all these other players. It's all about the collector base. How big is the collector base? How long is it going to be there? I start thinking about that stuff. If I'm going to borrow against a card, there has to be a demand for that player and that card. I don't know. That's just me.
100%. And right here, tip of the mid says the player is first. 100%. Yeah, you're not going to get me off. I don't think it'll be very difficult to get me off of that position right there. Ken says the GOAT rare stuff boat has sailed. I don't know. I don't know about that yet, but maybe.
I guess. What do you? I guess Ken, like, elaborate on that. What do you mean by that?
Yeah, Ken. If you don't mind, I think he's just saying like because right now the best stuff would go. It's like, who are the GOAT? It depends which goats. I always say we use the term GOAT loosely. I use it loosely because goats travel in herds, so there's more than one of them. I feel, but
I like it.
Right, but
that's nice.
But is Tom Brady a GOAT? Is Patrick Mahomes a GOAT? Some people no, but some people refer to him as that. And so some of these cards have come down so much. Right now is the best time to buy cards in the last 3 years for the majority of cards. So interesting. Spectre Fitness, once again, you're paying a premium to borrow money unless your ROI on a card is insanely, it's a bad financial move. You're paying interest to retain a card. It makes no sense. Just sell the card for cash. Yeah, unless you're like really, unless you're doing it, Spectre, to buy a collection at like 60% comps, selling them for 80 to 100% comps in 90 days and getting your card back. I mean, there are use cases for it, but few and far between. That's where it's hard to get out of our own mindset. Ken here says a Wilt auto would never drop as much as any LeBron stuff. I agree with that, at least for now and while he's still playing. Shohei, says Eric, to borrow or lend against. Tip in the mid says, I'm with you exactly 100%, not to borrow against my cards. It hurt to sell one of my 253 satchels as just in case backup funds for my recent wedding. Yeah, fair comment right there. Tita says Moore matters. He's a spillover. Right now he matters, but once people who are collecting that 86 Fleer set and PSA 10s realize that they're not going to sell that set complete and get their money out of it, Moore value will come down. And just, I mean, I'm pretty confident. I don't want to say trust me on that because maybe not, and I don't need you to trust me, but I wouldn't do it. I don't believe it. Ken says, check out some lower end players in highly collected rare sets. Those are the ones that will surprise. Oh, yeah, they have been surprising a lot of sellers, but I think that's a temporary thing myself. That's what I think. I think it's a temporary phenomenon.
And Jeremy,
Big Mantle, greater than Superfractor anybody, says Jay-Z. And I mean, Superfractors are one of ones. Those are they're special cards, but Mantle is the most special baseball player in the hobby. So tough to say. Professor says, Brent gave a nice use case definition of rarity versus scarcity. How do you define these two terms? rarity is just how many cards are out there. What's the print run? Scarcity is how that matches up against demand. That's how I look at the difference between rarity and you can have a card. You can have a card that is more scarce than rare, or you can have a card that has a print run that is higher and be more scarce than a card that is rare. So what I mean is you can have a card of a nobody where there's 10 copies. It's rare, but not scarce. You could have a card, there's 100 of them, and that's scarce. So I think that made sense. T-Dot says the holder of a 10 more knows its value. Right now they do, but they're not going to know it forever. Bobby says the hobby can be a leverage of life's contentment. Always adding a little spiritualism to the discussion. Dennis, were you going to jump in with something?
Yeah, I was going to say, I think Cage brought up a point here at the bottom here. I think, and he said the real question, and I think actually Brent's point, I think this is what I've been trying to allude to all episode long, and I think he put it really rather well. If the lending borrowing stops and the prices bottom out to pre-run-up prices, let's just say lending borrowing using a credit card, and prices bottom out to pre-run-up prices, does the whole thing go back to a flatline hobby for the next 2 decades? This is what I was trying to say. Are we going to just go back down and go beep and talk about having the stones to hold the card 2 decades? That's 20 years, folks. I mean, do you need that $10,000 now, or are you willing to hold on to it for 10 years or 20 years before you get it back? That's a really good point. That's the kind of stuff I've been thinking about lately with some of the cards I have. The big ones I know I can never get back. I'm probably going to just hang on to those because I feel like I might not be able to get them back. But it brings up the broader question. Are we going to enter into a period of time where everything just kind of flats out and the people become impatient? Maybe people don't enjoy the hobby as much. Maybe they've gotten used to seeing, our cards go up even a little bit. People that want them to behave like stocks go, wow, they're not actually behaving like stocks. I don't know. It's something I always think about.
Well, yeah. Okay, so there's a couple things in Cage's comment here. So if lending borrowing stops and prices bottom out to pre-run-up prices. So lending borrowing, I think, drove some of the ultra high-end prices we saw, like the $500,000 and up kind of prices, maybe a few below there too. Okay. Maybe that drove some of it because
you think that that's what all those big numbers were coming from. It wasn't just institutional money coming in here. It was like people that had
not all of them. I think some of them. I think some of them. So what I'm trying to say though is that if that stops, and I don't think that it's a direct correlation. If that stops, prices will, and Cage isn't saying this, but he's saying if that stops and prices bottom out. So I don't know that those two things need to be tied together there with the and. But then he goes on to say, does the whole thing go back to flatline hobby for the next 2 decades? Well, it can't go back to what it never was. I mean, I've been watching this hobby values closely since 1985, 80. Well, since I got my first Beckett, which was a hockey issue, probably 1988 or 80, whatever that was. And the cards they've gone up slowly over time. They haven't flatlined. You look at a 20-year chart right now. Yeah, it looks flat along the bottom only because it's gone like this. It hockey sticked over the last couple of years and now it's come back down, but it was always going up nice and slow and steady, probably beating inflation, at least of the cards that I was buying and still own many of. It really just depends what you're in too, right? I can't speak in generally, which I'm kind of doing. So I gotta back that off of that a little bit, but I don't think that it goes back to a flat line for the next 2 decades. I think that there will always be ups and downs in this. There always have been. We had a run up in 2017. We had a run up in 2005. There's always going to be ups and downs in this hobby. So I think, but I don't think we're going to see the crazy escalation in values that we saw when we had a worldwide pandemic. I think that's the biggest, that had the biggest impact on values, not lending and borrowing. But that said, I don't think Cage is saying that was the cause either. US Sports Card says, do you think it's possible that Fanatics acquired PWCC to stop the alleged run on liquidation of the no all they did was buy because they got it, I think because they probably got it at a deal and they wanted a marketplace that was a pretty good one. I think that's the only reason why they did it. There might have been some other bonus reasons for them, but think that's why, for sure. Cage says, look at charts before 2017. Most cards are flat with small gains. Even Ruth Gowdy, we can easily go back to that, flat for a decade or two. Small gains. How small though? Like a 0.5%, 2%? Like, I don't know. I can only really go by my collection, and because I mean, I've been setting up a card show since 2005, and I mean, it wasn't flat. It wasn't flat in the markets that I move in, at least. So maybe I'm just luckier, savvier, more experienced than some people, whatever it is that allowed me to have more success in the last 20 years leading up to the pandemic, not even during it, but up to it. But if I'm the outlier and the majority is flatline cards for 20 years, then yeah, I bet we could go back to that. Why wouldn't we? Like, these are collectibles at the end of the day. Ken says, whatever happened to those guys that bought those high-end cards and sold shares to that item? We talked about that a bit earlier, Ken. That's already come up tonight. It's called fractional ownership. Tita says, generational turnover and social media has pushed art aside and cards to the forefront. Yeah, there was a lot of commentary. I don't know if it's still around. Haven't seen it lately. That cards are our generation's art form, our art, and I believe that. That certainly is for me. I do have some art too, but I not investable art, but just fun. Art is more of a hobby for me than even sports cards are. Pull up a Gretzky rookie chart from 04 to 15, flat. I don't know, Cage. I don't know. I mean, I remember I could have bought his PSA 9 Peachy for $5,000, and then that was probably in 2008 or 9, and then in like 2016, 17, that card went up to like 15, 20 grand. So, I mean, listen, unless I totally misremember, but I remember being priced out of the Peachy, so I bought the tops for $5,000, and now that's worth way more. So,
talking about the PSA 9, PSA 10.
What's that?
I wonder if he's talking about the PSA 10. I'm going to pull it up.
No one's ever lost money on a PSA 10. No one's ever lost money on a Honus Wagner. I don't know what he's talking about there, but
maybe he's talking about the 10.
Yeah, I just don't think he's right about that comment there. Maybe on the low grades that go up 1% a year or 2%, something like that. But definitely not. That's definitely not accurate as stated in that comment on the screen right now. MMA says, when high inflation goes away, the card market will increase again. Markets are cyclical. Yes. Cage says, you are right, but what drew people to cards were market-beating gains. Those weren't there. Small gains, sure. Yeah, but also don't forget, that's the key difference between cards and stocks. Nostalgia. There's no nostalgia attached to the stock market. Cards are nostalgic, and there's value in nostalgia.
And I am looking at here, Jeremy. I use the PSA 9 Peachy. Maybe that's what Cage was referring to. And so, you know, it is a pretty flat line from about 2009 to about 2013. Then it jumps up in 2014, and then it creeps up again into a pretty decent amount in 15, and then it's kind of up and down until it goes up.
That's a 6 year. That's a 6 year. Now, my holding period, I always say, if you've watched me before, my horizon on my big cards, unless I sell some for life stuff, is like 25 years. That's my horizon. I'm not in this day to day, week to week, month to month. I'm in this for the long term. And people that have known me in this hobby know that they've been seeing me in the hobby for that long. So
right.
Yeah, I mean, but small gains are still gains, and I mean, they're better than a lot of stocks that have been out there. But again, back to nostalgia for a second. What drew people to cards were market-beating gains. But those are short-term people. They're dipping in and dipping out. Collectors, passionate people about this hobby, which does live within an industry, are drawn in by nostalgia. And nostalgia is even like more valuable than money. It drives value is what I'm trying to say there. Okay. Tip says, is there a link for tag somewhere? Taggrading.com. Tip taggrading.com. Bobby Burrell says, only buy what you can afford to lose for your personal collection, or only invest in the things that won't affect your living life. And that's just good advice. That's just good advice right there. MMA says, you guys are way too bent out of shape about leverage. Hardly anyone uses predatory leverage. People lose way more money pissing away their hard-earned money gambling. Yeah, and I think you're probably talking to the chat here, MMA versus me and Dennis are here, because we're not bent out of shape about it. We're just talking about it tonight because it's been a hot topic lately in the hobby, with alt coming, someone kind of coming and offering it at a time when the narrative in the hobby was sort of anti-lending in the hobby. Eddie from Investacard, who was one of the figure, he was like the symbol of it for a long time, hasn't been seen a lot lately, so not sure what's going on with that now, but anyway, that's why we're talking. It's a hot, and then PWCC was doing a lot of it, and then it seemed to be a big reason why they had to sell their business. So that's why we're talking about it. MMA. Mm-hmm. Professor says Gretzky Pareto cards thus are not flat in appreciation. I don't think they are. Rage, good. Thanks. Happy to make you laugh. Rage says, tell the Wolf of Wall Street there's no nostalgia. Fair enough. Jay-Z says, as soon as your collecting outlook becomes 20 to 25 years out and you buy right, your collection will grow and grow big. Fair enough. Fair enough. Cage says, Jeremy, love your stuff. I know you do, Cage. By how many people who came in the last few years but how many people who came in the last few years have a 25-year window? I like the nostalgia argument. I just think most people who came in, 100% Cage. No doubt about that. No doubt about that for sure. But those aren't if they're watching right now, that's great, but those aren't the people that, listen, here's the thing. If those people who came in the last, in the last few years, if you don't have a 25-year window, then adjust your expectations a little bit and understand that, listen, if you thought you were going to come in and just make money hand over fist, you were just part of the herd. You weren't thinking for yourself. You were, and not to say that you were following any specific influencer out there, because I think we're, you got to take some accountability for your own decisions when you're deploying your funds into anything and not blame somebody else. Nobody wrote the check for you. But again, this is content. A lot of the content that I put out there is just educating through experience and saying, listen, this isn't going to last forever. And I got caught up in it too in 2021, 2022. Oh, this is great.
But how many people, Jeremy, do you think came in and they're sticking around?
I don't know I think more than we think.
You think more than we think?
Well, card shows are still super busy. Card shops are super busy from what I hear. I'm not at all of them. But yeah, there's more shows than ever, and people are doing them, are there all the time. There's so many. I had lunch today with the guy who runs the Toronto Expo, not the owner, but the guy who runs it for him, Mikey. He was in town for another event, and we met for lunch. And we were talking about this a little bit. He said that the card shows that he's involved with include 3 expos, 2 in Toronto, one in Edmonton, and the Strongsville show. He runs that show as well. He said that these shows are busy and filled with kids, maybe the Strongsville a little bit less, but he's like, the hobby is very strong, very, very strong. Yeah. So how many of those people are still in? I don't know, Dennis. It's tough to, but if I were to give a guess, even if it's like 25%, I think that's pretty good. Like any net gain over 2019 is a net gain for the hobby.
You got to wonder too, why would fanatics want to enter the space? Why would they want to invest so much into the space if they didn't see an opportunity? And they're not idiots. They didn't see an opportunity to capitalize on a hobby. There's got to be metrics out there they're using to analyze when they make these purchases of these companies to get into the space, to spend the kind of money for the licenses. There has to be some forethought into going, hey, we see this turning into X, Y, and Z. I mean, a lot of us are sitting there going, okay, the stuff that we have, we love. Yeah, I think you got to hang on to it for a while. I mean, some of it might just be for our generation, and I argue, well, after I'm gone, then I'm not really too worried about the value of my cards. I mean, I'd like my son, my daughters to enjoy them, but, I'm worried about my timeline and my horizon when I'm here on Earth, right? So, and I feel Ken Griffey Jr. is probably going to be, valid and important in our society until I'm gone. So, but and then people will say the same thing for me, LeBron, or they'll say the same thing for these players. But I think that there has to be more people than we think sticking around in this hobby for, some of these LCSs selling product. I mean, the breakers going through the product. I mean, there has to be some sort of a signal to companies like Fanatics to want to get involved and invest the kind of capital into this space that they do.
Well, at the recent Fanatics, I think, investor meeting, when leading up to their impending IPO, I saw a clip from it, and it was either Michael Rubin or Mike Mahan made the comment that they see potential because they see how many sports fans there are in their other businesses, and they think that they can convert sports fans into collectors. I think so too. That to me is the biggest sort of potential that the hobby has, and I agree with that potential because not every sports fan has the collector gene, but I think a lot of them do, and they just don't know it. So I see that. But back to for a moment to how many people are still here. Well, Eric Stefano, I got in 2019, and I'm a lifer now. Well, Eric is not alone. We have 110 people watching us right now, and that's a small portion of the overall hobby. So if 1% of the people watching us right now, that may be that 1% of the whole hobby came. And again, he's not the whole hobby. He's only representing the people that came in 2019. We got probably more people that came in a lot before that watching us right now. So Bobby Burrell here says the generational shifts are coming. The hobby is not the usual forecastable investment. Too much is relying on Fanatics at this point. So that's where, listen, I think a lot of people are relying on Fanatics, like people opening up new card shops and new businesses. I think there's a lot of reliance on Fanatics there. I think it's probably a good bet, though, for the most part. But I think Fanatics is again, to what I just said, what I heard them say. They see the potential based on their customer base and their other lines of business, and I think that's just a smart insight and a worthy insight. Decoy here says, I wish we could poll 2018 season ticket holders to see how many of them used the money they would have spent on season tickets on cards. Yeah, okay. I'm sorry, I'm just having trouble seeing how that fits into everything, but okay, I think that.
Well, I think it's meaning like since they weren't going to games in 2020, they just instead used that money to go buy cards because they needed.
Oh, fair. Yeah, thank you. Sorry, Decoy, but thank you. Yeah. Cage has tagged. Thank you for joining, Cage. It's always good to see you. All right, Johnny Depp. There will be a fresh crop of MMA. There will be a fresh crop of new flippers in a year or two. Probably. I mean, as there's a lot of young kids in this hobby right now who aren't able to travel as much as they might like, don't have maybe the cash they'd like, and they'll grow up and have jobs and all that sort of thing. It's just like you hear a lot of people say, I collected through college, but then when I got my first job and I had discretionary income, I started collecting. That's what I did. That's when I really started pouring money into cards, back when I had my first professional job in 1997, I guess it would have been. Ken says a lot of them have that gambling gene, opening packs and boxes, have plenty of, yeah. So it's funny because Dennis and Ken and everybody throughout this whole discussion we're having, the breaker customer hasn't entered my mind. I haven't even thought about breaking this whole time. That is a whole other, I've been thinking about buying and selling singles. Breaking is a whole other channel of the sales channel, distribution channel of this industry, of this hobby. And we could have a whole episode talking about the pros and cons of breaking, or how breaking has built the hobby up and help it how it has changed the hobby, as much as even the manufacturers cater to breakers now. So MMA says Fanatics will bring the flippers back. Any opportunity will bring back opportunists. And I think that's right.
That's true.
Skeppy says Fanatics got in thinking the card market was something else. Now they're trapped and have to make it work. No doubt the market has grown, but it will not grow to see. I don't agree with this, Skeppy. Not like, listen, I just see it a bit differently. I actually think that Fanatics is smarter than that. I think the Fanatics would have studied the market and would have seen that nothing goes up forever and doesn't come down. You don't get to be Fanatics with being stupid.
Well, that's what I was going to say.
Some insight, right?
Yeah, I was going to say the same thing, Jeremy. That's a great point you just made. I don't know if I completely agree with that comment either. I feel like Fanatics did their homework. I mean, they're not entering into this. They're not spending that kind of money to say, oh, well, we think it might work. I think they really have it figured out. I think breaking plays into it. I think sports betting plays into it. I think just, having, cards be present more at all the stadiums and the arenas. And I think it's going to become more part of like that whole experience as a sport, as a fan, that's going to become a part of that fan experience is sports cards. They're going to become part of what you do. I go to sports games now in Seattle and they're handing out packs everywhere around the stadium. So, I mean, top stuff is everywhere. So, I mean, it's a thing. I think it's going to take some time to catch on, but I think that maturity will come in time.
And the other thing is that the hobby narrative right now, a lot of the commentary is judging Fanatics on what they've done before they've had a real license yet. Like they have tops, but they haven't even touched basketball or football yet. So to judge the next 20 years on the last 18 months, I mean, you got to zoom out, people. You can't just think that that's gonna be indicative of the future. Listen, the other thing about a company like Fanatics, they're going to have failures. They're going to fail, but you know what they're going to do? They're going to fail fast because they're smart business people. They're going to fail fast. They're going to pivot. They're going to adjust on the fly and make the right decisions moving forward, or better decisions moving forward. And then they might see problems and misjudgments and like moves that didn't make sense. And then they're going to adjust again. They're not going to rest on their laurels. They're going to fail fast and make the changes quickly. That's what I think they're going to do.
How long is the license? Jeremy?
I don't know.
You don't know how long they're. No,
I don't know.
I wonder what that is. People know.
But no doubt the market has grown, but it will not grow to what Fanatics hope, says Skeppy. I mean, listen, you don't know that. We don't know that because we haven't seen the power of their marketing yet. And don't forget, everybody in here loves cards. So don't you think that other people have it in them to love them too?
Yeah. I definitely feel like I've had a few people ask me and they want to get into it. Like, what do I buy? And they're asking now. There's a few that asked back when it was, at its peak. I would say the boom was at its peak, but there's a lot of folks now coming to me going, hey, I see you're always posting your Ken Griffey Jr. cards, because we're, here in Seattle, we love, I mean, he's a big deal, right? So you have a lot of folks coming up, hey, friends, hey, do you collect what Ken Griffey Jr. card should I get? I'm like, well, I start here. And so they're starting to think about it, right? I want to own a couple of really good cards. What should I target? So those kind of conversations are being had with a lot of folks my age, kind of nostalgic, but then there's also younger people going, yeah, I want to get into some of these newer players. I want to get into Julio Rodriguez card, right? We love Julio. He's kind of the new guy, right? So people are getting, or Shohei Ohtani or whatever it might be. So, some of those bigger players are starting to make an impact and they're starting to think about it. So I do think there is a future there. I don't know. I just think it's going to be a slow thing. And maybe it is going to be a flat line of just small gains, like Cage was alluded to earlier. If that's the case, I'll take that too, right? It's more sustainability, right? Something that just like this isn't necessarily sustainable.
Those small gains in sports cards are more fun than small gains on some investments or large losses.
Exactly. Yeah.
I mean,
absolutely.
T-Dot here says market cap exploded and many cards are locked away. Keeps demand healthy, especially for vintage and high-end modern. Yeah, I agree with that. US Sports Card asks, is there anything Fanatics could do that would increase the value of modern hobby products for new collectors and depress interest in the vintage marketplace? My thoughts, Dennis, on this and US Sports Cards is not really, because all the cards, see that there's two things here. First of all, people think that Fanatics is like has all the power. They only have all the power over cards from 2023 and forward. There's 150 years of cards leading up to that they have no impact on, unless only through their PWCC marketplace. That's really it, right? So I don't think there's anything they could do because people love history. People have nostalgia. Now, 50 years out, I'll have a different answer for where they're at. And because now they have their cards are vintage 50 years out, or the new vintage. So Deep Value has left the building. Thank you for joining. Bobby Burrell says the card market had to come down to create new collectors again. Kids don't cut grass or shovel snow for extra cash. Many buy and sell cards now. And I mean, yeah, that's what many of them do. And but I think the beginning of this comment is what I like the most, is that people were having trouble affording cards. You couldn't find cards at Walmart or Target. You couldn't go to the hobby store and buy a box of cards for under $300. So price had to come down for sure. I definitely agree with that comment. Stop printing so much, says Ken. I appreciate the sentiment that Ken makes here, guys. However, printing product is why why card companies are in business. Keep that in mind. This is, as we said earlier, this is a profit-driven industry, like all industries are, except for charitable industries. And even some of those might be profit-driven. So, Hey, we're going to start to wind down. Hey, Dennis?
Let's do it.
All right. Tip of the mid is I'd rather lose value in my cards and still have them than not have to sell them off. I think that's a collector comment right there. And MMA says predatory leverage products will multiply again in the future. We'll see. Definitely possible. All right. Well, listen, I think we went pretty hard on this whole thing. We were talking about leveraging cards, lending against cards, borrowing against cards. We kind of got into some other topics there, but it all kind of came back to that. So thank you to the chat for some great comments throughout, keeping us on our toes. Had to do some heavy thinking here on the fly. And one thing I'll say to everybody is, if you've never done a live stream before, and I've done over 400 live streams now that are like averaging 2 hours each pretty much, I just want to caution you. You may have heard me say something tonight that I will look back on and say, I didn't think it through. I am not a perfect live streamer. I have said things I'm like, I didn't think it through. So, and these are one take shows. So keep that in mind. Not everything is, I'm not married to every comment I made, but I try to think things as fast as I can on the fly. Dennis, you've now been doing more live streams than ever before. Does that resonate with you at all, the comment I just made?
I mean, yeah, you're kind of going off the fly. I mean, I think you're more honest in your reaction because you're reacting to things right on the fly, right? You're reacting to things live. And so you don't have time to prepare for the answers. You just kind of have to come off the top of your head. And sometimes you're going to be emotional about it, or you're going to be very convicted about what you say. Maybe you have to think about, oh wait, maybe I shouldn't have said that. Because I said something about, cars not being stocks. And I got Joey, he was messaging me going, I don't agree with your comment about them not being, treated like stocks. And so I was like, I didn't know you thought that way. I'm like, well, yeah, I kind of do. And I kind of don't. I mean, everybody wants their purchases to go up in value. You want your cards to go up in value. You don't want to buy something and have it be worth hardly anything. No one's going to feel good about that. But I don't know. So you have to sometimes go back and rewind and look at it and go, yeah, I did say that, didn't I? But that's what's fun about these conversations. I think it's great. I just love how the chat pretty much guides the whole thing. We just sit here and respond to the chat. And to me, I think that's the best part, because we're basically it's like a bunch of us guys getting together in a big room and just talking about cards for an hour and a half. And that's just so much fun to me. It's everybody gets a chance to be a part of the show, talk and so I always make it like I'm a nobody. I don't really know anything. I'm this new guy who's just learning from everybody, and I don't mind being that guy at all. And it's just awesome to kind of get everybody's point of view and the things that they think is and how they approach the hobby, and the points of view they have are always different. It's just awesome. And the hobby community is pretty strong in a sense of like it's very, very communal and very supportive, and everybody's kind of doing the same thing. And a lot of us folks are kind of in the same spot. But at the end of the day, most of us that are here, if not all of us, we love cards. That's why we're here. That's why we do this.
Exactly.
So
I just want to say I'm looking for a video. I think it was on Rob Gerard's Sports Card Therapist channel this past week. I think it was him did an episode with a financial planner whose name I can't recall, but it was his first time doing a podcast. And this comes back to your conversation with Joey about, cards and stocks, and the financial planner who, has been in business, I think he said 25 years, seemed like a pretty smart guy, basically said that, cards can certainly be investments, but they're an alternative investment. They're not stocks.
Yeah.
They're just not stocks. Like Joey needs to that hammered into his head. They are not, if he truly believes they're like stocks, they have some similarities, but they're not stocks, and they shouldn't be treated like stocks. They're an alternative investment. They are definitely an investment. Stocks are also definitely an investment, and those are that's one of the things that they have in common, but they are not stocks. I mean,
he might be thinking that way too. I don't know. I mean,
I think he has to be, because otherwise,
no,
I mean,
I don't think he thinks they're like it's not like buying Verizon Star or Pepsi or Microsoft or Amazon stock. It's like it's not the same thing. If you're buying the right cars, you can definitely hold them as an asset. Yeah, they could be an appreciating asset over time. Absolutely, if you get the right card. But I just don't feel like there's tons and tons of those cards out there. Always depends on the player market and the player's collectible market, player's collector market. In that demographic. So always plays a key.
Hobby Champ says the hobby is bigger than manufacturers. The hobby is all cards. Manufacturers are just trying to tap into the hobby vein. They're the suppliers. The manufacturers are the suppliers, but they're only one part of the overall hobby. Eric Stefano, thank you so much. Rick Hawkins, thank you so much for being here. Tip of the mitt. Philly Joe, appreciate it. Childhood Greats, appreciate it. Tim's Giant Mem, appreciate their blackjack funding. I'm not sure what that's in relation to, but thank you, Tim's, for being here. Two of my cards in my collection, guys. Just a quick show and tell. But for the 92 people still here, I now got Batman and Robin paired up. 1966 Batman Black Bats. Beautiful cards.
Nice.
All right, guys. Dennis, a pleasure as always, my friend. Chat, thank you so much. We will see you all next time, 2 weeks from today, back on Taking Stock. We're done.
Hayes in the barn, boys.
Thank you, Chuck. Thank you, Junk Wax Museum. Thank you, Professor. Thank you, Rage. Thank you, Hobby Champs. This episode is now over.